Hi everyone, welcome to this live event. As usual, I'm here to cover a bit of what we're expecting for the week from the fundamental point of view and, of course, the technical one. Let me start by saying that, oil has been the main market driver for a couple of months already and will continue to be so. We have the so long awaited uh, meeting of oil producers the last weekend in Qatar, and as expected, it was a fiasco. They came to no agreement. They don't want to freeze oil production. Uh, there are several reasons why they decide this. I do believe that in one hand, we have Iran that wants to recover the market share that it has before the sanctions. And now that sanctions have been lifted, it wants to recover that market share. And yet, on the other hand, we have Arabia Saudi, which I do believe that it wants to dump prices, right? To take out competitors of their way. They have no problem should the price of oil continues falling. Anyway, and beyond the weekly opening gaps, the commodity has managed to recover the ground lost and trace above or nearby Friday's closes, which has been a good reason for risk appetite to recover. Sentiment continues to improve. Last week we have uh, several positive readings coming from China, and I do believe that that helped market sentiment improve. In fact, if you take a look at what happened with the sales survey in Germany today, the assessment of the current situation has fallen, indeed, indicating how it's the reality going in Europe. But the economic sentiment, the future outlook, both in Europe and in Germany, had rose, right? Seems the market is getting more confident on how things are going on and that we are near avoiding the economic slowdown. Anyway, it's nothing certain, but risk appetite is back in vogue, and that is how the market's trading. And there's a big exception going on in that concept, and it's the fact that the euro remains subdued. It's unable to recover beyond 1330, right? Steadily beyond that level. In fact, we have a spike up to 1345 or so today. But the 1330 region is where the pair has been bottoming for the past 2 weeks, right? So the lack of follow through beyond that level is pretty suggesting for Euro bulls, and I won't surprised if they suddenly capitulate and the euro plummets. Anyway, and for the upcoming days, hours, we have in an hour, right, ahead of the US opening, housing starts and building permits in the US. You know, that in the US has been pretty soft lately, pretty soft. So if these figures are again soft, we should expect further dollar declines because beyond oil, beyond Brexit, beyond euro current weakness, the dollar remains the weakest currency across the board. The dollar remains sharply bearish, strongly bearish. So any negative data coming from the US will likely weigh on the American currency, right? Anyway, later on today we have Governor Glenn Stevens from Australia, Australian Central Bank, and Carney from the Bank of England speaking, and Polos from Canada. Uh, uh, Taking one by one, the fact is that Governor Stevens is beginning to be concerned about the strength of the OC. But if you take a look at the OC, it's at fresh highs for the year, right? So, as I said many times in this live events, wording of a central banker hardly has a long-lasting effect, right? Particularly when the comment is against the dominant trend. So no matter what he says or how concerned he is about the OC strength, unless he actually acts, the speech may result in a downward move in the OC, which will only attract more buyers, you know? So beware of that. Yes, I believe that still in the OC, dips are seen as buying opportunity. Carney is in a different case. The Bank of England is on hold and will probably remain on hold. Its main concern now remains to be Brexit and the economic risk that it has attached. I don't know, we have a long way to go, still more than 2 months until the referendum, but the market seems to be unable to take that out of your minds, right? So uh, the comments of Governor Carney, we have yesterday Treasury Secretary Osborne explaining how the GDP will plummet, how the housing income will fall if we had a Brexit, and yet the pound surged strongly, right? I do believe that because the market is being led by the sentiment rather than Brexit these days. So any comment he made, any negative comment he made today, Carney, I mean, will hardly affect the pound, right? Unless he says he's willing to cut rates into negative territory, that will be a shock, and therefore the pound will plummet. But beyond that, if he stays in line with his latest comments, the most likely scenario is that the pound will continue rising, particularly if it holds above 143. And Governor Paulos, the Canadian dollar has been recovering sharply. The Canadian dollar has been doing pretty fine. With stocks higher and commodities on the run, the Canadian dollar will find support. I don't know how much Governor Paulos will tolerate the Canadian dollar strength, how convenient it is for the economic recovery of Canada. But anyway, I don't expect him to offer nothing new, to produce any shock. So for the most, I expect it to be slightly bullish towards the Canadian dollar. Okay. Up next on Wednesday, I do believe that the main market attention will come in the UK employment figures. It will give us an indication of the health of the United Kingdom, and therefore could fuel or uh, weight on the pound, depending on how the readings came accordingly to expectations. Remember, the reactions are higher in any fundamental macroeconomic report when it's strongly deviated from what the market is expecting, because this is what we have already priced in. Okay. And later tomorrow, the US will publish again some housing readings. This housing sector is among the most important in the US because it has been the base of the 2007-2008 crisis worldwide, right? So the market is still quite sensitive to housing data, and therefore, if we had a batch of negative readings in there, the dollar will probably suffer, but we will probably have an increase in risk aversion. So beware of that. Anyway, on Thursday, of course, the main attention will be the ECB, right? I have been reading lately that there are some expectations of further easing and extension of quantitative easing, more and more and more. Honestly, I don't expect Draghi to do anything this time because after launching fall armor on March, he will prefer a wait and see instead. And if he stays on hold, then there's a good chance that the euro will lose ground. So pay attention to that. But if he offers more armor, quite difficult scenario for me because I'm not seeing much of an upward potential in the euro at the time being. But anyway, take a look at that. Okay, beware of that and don't trade the euro ahead of the ECB decision. And on Friday, I do believe that the main attention will be back on Canada and inflation. It's expected to have a decline in March, which is not good news. So a positive surprise in here should be a huge boost for the Canadian dollar. Okay. And the market manufacturing PMI in the US. It's a preliminary reading for April. I do believe it's quite relevant because lately PMIs have been pretty disappointing in the US, indicating that the economy is still struggling to grow, right? It's not that the economic slowdown has really reached US shores, but uh, it needs to give signs of a stronger growth. Okay, I do believe next week. Yeah, I do believe next week we have the April Fed meeting. That will be much more interesting, and we may have a positive surprise in there. I don't know. I do not expect them to rise rates, but they can. That will be a shock that the market actually needs. Okay. Anyway, let me try to share my charts with you. Here we are. And let's start by taking a look at the euro as usual. Right, I have drawn this Fibonacci retracement. We have a strong base in the 820, 800, 840 region. Pair has been above it pretty much for most of this year. So I believe that's quite a relevant low, the one we have in here. We have this ascendant trend line. But as I have said so many times, 1460, right, is a major resistance level, right? As if you take a look at your weekly, you will see that the pair has stalled around 1460, 1480, paid plenty of times during the past 2015, right? And what happened this time? We reached 1464, I do believe, yeah, and then we retrace over 200 pips. Anyway, I'm taking a look at the chart. There's no clear indication that the pair will turn bearish, right? But it's telling me that there's not enough bullish trend right now. But the downside seems well limited as long as the price remains above this 1220 region, which is the 38.2% retracement of this run. In general, as I was saying also before, this 1330 region, 1340, has contained the downside for almost 2 weeks, past 2 weeks, and all of a sudden we broke below it, and here we are struggling to recover the level. So today we really need an upward acceleration in price above that high we posted earlier, 1344, to see the pair gaining some upward potential. I do believe 1420 is possible, right? Particularly if we have disappointing US data. And above this last back to 1460. However, I do expect the market to profit quickly if we approach to this level. I'm not sure if we're going to break above it ahead of the ECB, if the market will dare to push the price above it ahead of the ECB. The immediate support intraday talk speaking 1270, we have plenty of highs and lows around that level, and of course the 1220 level that we discussed a few moments ago. If this one gives up, I actually believe that the pair can go down to 1120, 1160. That price zone has been a major static support or resistance also for most of the last year. So it, to talk about bearish euro dollar, we need to go below 1120, something I can't see at the moment, right? 200 pips lower seems way too much. As for the pound, it's steadily rising. I have drawn this daily descendant trend line coming from February high, right? And today it's around 44, 44.05 or so, right? That's the level for today. So I'm actually expecting the pound to continue rising towards that price zone during the upcoming hours, right? And of course, if US data disappoints, we might break above it and rally up to the 44, 50, 60 region where we have some relevant highs from late March, right? And above that level, the next one is 45. I'm actually not seeing that much strength above 45. I was thinking earlier today that for the last 2 or 3 weeks, attempts to rally beyond 143 have resulted in selling opportunities for the market, right? The market has taken a sell opportunity and quickly send the pair back lower. But today we go to 43.30. All of a sudden, again, the pair plummet, but it was fastest. The recovery one, it tested 42.80, and let's go to the 1 hour there, right? The pair was here, it plummeted, and all of a sudden it bounced and reached fresh highs. So that's telling me that the bearish pressure is not only isn't, but that the bullish one is outpacing winners, right? So beware of that. Beware that the pair may uh, met meet solid rates, buying interest on dips and continue riding. Uh, and for the OC, as I was saying, I believe the pair is still bullish. I still see the OC bullish. This latest recovery and gains beyond 77 finally had confirmed the trend, right? In general, I'm actually expecting the pair to approach the 80 figure over 200 pips from current level. 78.20 is for me the immediate resistance and the probable bullish target on further OC gains. So that's the point I'm looking for today. Okay, 80, 78.20 or so, and a break above it to confirm further gains. Dips down to 77.60, the immediate support, right? Could see the pair retreating further, but as long as we hold above 77, the risk remains towards the upside. 77.30, sorry, where the pair stalled plenty of times in the past, is the next support below that 77.60. And the dollar Japanese yen, guys, we have another test of lows in this 107.60-70 price zone this week. It's the third week in a row we bottom at around that level, but still, there's no follow through. There's no upward movements, right? They are sort of a double, triple bottom, whatever you want to call it in here. And the neckline comes around 109.70, which is the spike in the middle. So I would like to see the pair breaking the 110 figure, right, to confirm a more constructive outlook in here. And yet we have those lows around 1060, right? Yeah, those are the ones to really overcome to see pair gaining some ground. But still, I do believe that any upward movement will be considered corrective unless we take 15, right? In 15, 115 is the level to break to talk about a long-term bullish dollar Japanese yen, to talk about dollar strength. So we are too far away from the level. By the end of the month, the Bank of Japan will meet. So maybe they decide to extend their easing then, right? Particularly because they are pretty annoyed with recent yen strength. But I do believe that we already comment this. I do believe that they have set the line in the sound around 105. So if they don't intervene the market and or don't extend facilities and the price plummets back there, there's a chance that the pair will go on to test 105. Okay, as long as we don't move higher ahead of the meeting, because I don't know, some wild surprise from the Fed or something like that. The Canadian dollar, as I was saying, it's pretty strong, and I know how much concern can be Governor Paulos right now. Okay, maybe he will start getting more concerned if the pair moves beyond 2350, which will signal a long-term bullish continuation. But at this point, the pair is pretty bearish, and despite the rally seems to be overextended, there's little suggesting that it may change the way, right? I was watching earlier today this 200 exponential moving average summary that is clearly leading the way lower with a nice bearish slope far above the current level. And in the meantime, the price is hovering around the 20 simple moving average, but hardly holding above it. Yeah, corrective movements are reaching lower highs, right, weekly basis. So overall, the bearish trend prevails in here. And for oil, remember I was saying we fill the gap, weekly opening gap, and advance somewhere 50 cents, the most above the weekly opening gap. But what I'm following more seriously, sort of speaking, is the fact that the commodity has broken above its 200 simple moving average in the daily chart for the first time in years, right? Um, but both moving average, the 200 and the 100, had lost their bearish potential, right? And of course, they are slowly changing BS, but there's a long way to go until the 100 can cross above the 200 and and signal a longer term bullish run. Anyway, overall, I do believe that we may see some wild moves in here, but any dip towards 35 will now be seen as a buying opportunity, right? I don't expect much of a break higher. Maybe we can go up to 45, but I would say that $10 range will probably contain price until the market and the supply and demand settles, right? Not the market, the financial market, but the physical market of oil. Okay. Keep in mind, however, that the glut, the worldwide glut, the excess of supply is still present, right? So there is the risk remains towards the downside, and there's little chances to see oil skyrocketing through 50 to 60 or 70 or so. Not at this point. We have a long way to go until we get there. And for gold, it's quite a nasty behavior, the one we are seeing in gold lately, because we reach fresh highs and enter a consolidative stage, right? And seems that the commodity is unable to find a direction. It's pretty choppy price action in here. Sorry, there we are. Seems we are developing, right, within a continuation figure, which is this huge triangle in the daily chart. But we actually need to clearly break above the trend line, this descendant one, before the end of this month, because if we get to the vertex of the figure, a breakout won't be valid. Okay, before the end of the month, I don't believe that would be a reasonable signal. Okay, a reasonable breakout. In the meantime, the commodity has been recovering ground today, pretty amazing considering the market is in a better mood, right? So I won't expect much more for today on the commodity. Maybe an approach to 1250. That's the most. But take into account that the stocks markets rally in the US as they did yesterday, or if we have some serious improvement in market move, the commodity can go back down to the 25, 23 price zone. Okay, almost $20 lower. Anyway, I believe that's pretty much it for today. Okay, so thanks for being here, and see you soon, guys. Okay, thank you for sharing this time with me, and I believe that we will be online on Thursday with the ECB live coverage. Okay, I hope we have Yohai and Dale join us. Thank you, and see you soon. Bye bye.